Hi guys, this is Hector again. In this video I want to record what's a consecution of different breakouts, okay, different pattern breakouts. Basically, when you spot a trend, okay, trends are a very rare asset, okay, they are not that common. They are very valuable, and when you spot one of them, a sound trend, you know, according to the 3 moving averages filter, you want to exploit them all, okay? You want to exploit all the as long as you possibly can. Every single swing down or offers a new opportunity. You want to, once you spot a sound trend, okay, keep that chart on your watch list, okay? Don't let it go. Don't just exploit one go and let it go. Just keep an eye until the trend finishes. All right. In this example, I'm going to explain one trend that gave out multiple signals, multiple breakout signals, okay? And how by monitoring a trade, by making sure that trend continues being on your watch list, swing after swing after swing, you'll be able to squeeze different multiple entries up on the same trend, okay? Alright, in this particular case, this is the sterling pound against the dollar. We saw a number 4 different breakouts, okay, one after the other. First of all, we see a flat top triangle, alright, that gave way to the downside, okay. We have a nice move down, a period of consolidation, market taking a breath, breakout, and another swing down, which leading to a flag formation. All right, do you see the flag formation right there? As we've seen already in the previous video, flag is nothing but an ascending range all the way up to the area of dynamic support. There is probably also a Fibonacci level from here to here, alright, for sure. That's probably around the 61% Fibonacci. You also got the previous swing low acting, or that area acting former support, now acting as resistance, right off the area of dynamic support. That's a nice area to search for a bounce. We get the bounce right there, and then finally we get the breakout, giving out a new swing down, making new lows. All right. Sure enough, we get yet another range, another flag. You see the flag, okay? Another bearish flag, which again leads to another ascending range. Overshoots a little bit above the area of dynamic support. Resistance, but it doesn't matter because within 1-2 bars we shoot back below, okay? Again, another nice breakout, another rise, nice right down, making new lows, alright? Again, finally entering once again yet another flag formation, okay? You see the flag there? But this flag doesn't quite break to the downside, in fact breaks to the upside, breaking the area of dynamic resistance. The MAs are already flattening. This trend, as we can see, is weakening, finally shooting up, breaching the 100, and the trend is over. But at least we squeezed, you know, at least a couple of decent swings, okay, off the area of dynamic support, resistance, all right, this swing and this swing. So as you can see, like I say, once you score a profit, okay, you spot this flag, you see the breakout, you trade it, you gather some pips. Don't let this chart go, guys. Don't let it go. It's still valid for a new swing down, and sure enough, it gave yet another entry, another swing down, another profitable trade later on, okay? So, like I say, sometimes it's a very common price action pattern. Actually, you see a trend, okay, the moving averages, and then you see price swinging down nicely, each swing down forming a breakout pattern, okay. In this case, two of them were very tradable indeed. Okay, this one didn't quite retrace all the way to the moving average, to the 30 moving average, and anyway, at this time we didn't have all the moving averages on our side, so I wouldn't consider this as a tradable setup. But this one and this one certainly were. Okay, this one finally we had some early warnings. Such as you see the 30 simple moving average already flat, already closing in, tightening in very closely to the 50, and well, price certainly didn't break to the downside. Instead, it broke to the upside, triggering the breakout of the 100, and therefore, well, calling the downtrend to an end. But like I said, two nice trades, alright, one after the other one. That's very nice when you can profit a number of times from the same trend. That's the what swing trading, what trend trading is all about. Okay, I'm going to show you another example. In this case, is the Japanese yen. Basically, we see the same thing. We have a nice trend, alright. We have a nice trending condition according to the 3 simple moving average trend filter. We already know about how to recognize a nice trend. This is definitely the kind of market conditions I like to trade. And it's just a matter, once you spot a nice trend, okay, it's just a matter of finding a right entry. Okay, in this case, first of all, we have a triangle. Okay, you see two opposite trend lines. Remember that a triangle is defined by two opposite trend lines having price squeezed tighter and tighter in the inside of the section of the triangle before the final breakout. Okay, this is what we're seeing here. Price bouncing up and down and up within two opposite trend lines, one to the upside, the other one to the downside. Before the actual breakout, we see a formation that we already know: breakout, pullback, off it goes. Okay, we've already seen this before. Anyway, I recommend to search for the breakout, pullback, and continuation pattern of the shorter time frames. It's usually much clearer to spot, okay, to recognize the pattern. So we get yet again another swing down, and sure enough we enter an area of consolidation, another flat top triangle, alright, retracing all the way to our favorite area, the area of dynamic resistance. Shortly after we get another breakout, we will have to zoom into the shorter time frames to see if we get the 1, 2, 3 aspects of a breakout, but nonetheless we do get the breakout. Sure enough, it gives way to another swing down. At the end of this swing, what do we see? Another flag back to the area of dynamic support and resistance, and sure enough it breaks to the downside. Eventually the trend is compromised by price breaking above the area of dynamic resistance in momentum. Alright, do you see this large green bar, okay, that shows momentum above? Then we see a number of bars closing above the 50. Price is basically meandering above the 50%, the 50 simple moving average. The 30 simple moving average is already flat, and well, I personally would be very cautious to enter at this time of the chart. Okay, I don't know what happened afterwards, but I know I don't need to see how in hindsight what price actually did after this. I don't need it. I already have my warning signals in here. Okay, I already see the breakout of the 50 in in momentum. I see many closes above the 50. I am not interested in this part of the chart anymore, okay? But before having reached that point, we had 3 nice breakouts, especially this one. This one was very clear, okay? Very clear flat top triangle. Nice breakout in momentum, guys. Try to read price action, all right? Try to read the a bounce off the area of dynamic resistance, a nice momentum breakout, and sure enough, look what happened, okay? So once again, like I say, once you spot a very nice trend, okay, don't just profit it from it and scratch it off the table. Keep monitoring that trend, because it might very well give another signal, another valid entry at some point down the road. All right, let's go for another example. This case is the Swiss franc, and we see basically a similar scenario. All right, so another nice trending market. Okay, moving averages laying out on the chart the way I like them to be, okay, the way the 3 simple moving average trend filter indicates. First of all, we see we come from above, okay, moving averages are falling in place. We see a flat bottom triangle, all right. Price bouncing down and up and down and up and down and up, and finally giving way to the downside in the direction of the main trend for a nice ride down. Afterwards, we enter another flat bottom triangle, okay. Rather scrappy, to be honest, okay, rather directionless. It's almost a range, all right. It's almost a horizontal range. You see that? Anyway, gives way to the downside, and we enter yet another horizontal range, all right. Down, up, down, up, down, and breakout for a new swing down, all right. You see how basically we are following the same pattern in all the charts that I've been showing you. One swing down or swing up in case of an uptrend, one swing up, a period of consolidation. It doesn't really matter whether it's a triangle, whether it's a range, or whether it's a flag, okay. It doesn't matter the actual pattern of the congestion area. They are all basically the same thing, just different shapes, but the same price action behavior. Market swings up, pushes up, then takes some moment to breathe, to reassess the direction of the next move. Eventually, if it breaks to the upside, it gives way to another swing up. We have a breakout chance there to ride for a new swing up. Hopefully we do find an entry, and then again another moment of indecision, of market congestion, taking a breath, reassessing our next upcoming move. If we do get yet another breakout in the direction of the trend, off we go to ride a new swing up, and so on and so forth, okay. As you can see, swing down, congestion, swing down, congestion, swing down, congestion, swing down. It's a very typical pattern. The fundamental part is to spot the trend, and once you spot the trend, spot what price is actually doing. Please go back to the first chapter in the section where I was talking about the trade plans. If you review the first point of the list, it was to basically ask yourself, okay, what's price doing at this time, okay. You see a swing down, and then you see that we've entered a period of consolidation, okay. You've gotta learn how to read price, okay. Ask yourself, what is it doing now, okay. We've in this case, for example, we've just come from a nice swing down, and now we're taking a breath. Okay, price is taking a breath after a nice swing down, and we are hitting the area of dynamic resistance. What's to be expected from this moment on? Well, from this moment on, if the area of dynamic resistance does hold and we get a breakout to the downside, we could be expecting a future move down. All right, so we do get the move. Let me clean up the chart a little bit. Oops, sorry about that. So we do get the move down, okay, and we enter another period of consolidation. What's price doing now? We've just come from a nice swing down. We are taking a breath. The moving averages are pointing down. They are all in order. We are finding resistance at the area of dynamic resistance. And so what's the trade plan? The trade plan is to trade a breakout to the downside. Okay, it's a very mechanical trade plan. All right, it repeats. It's the same pattern over and over and over. Swing down, consolidation, swing down, consolidation, swing down, consolidation, and so on. We will keep on exploiting every swing down until eventually we break to the upside. Okay, once that happens, the trend is over, but in the meantime we've profited from every opportunity that trend has given out. Okay, analyze what price is doing. Swing down, consolidation, range. You see a sideways price action. Search for the breakout, guys. Search for the breakout to the downside for a new swing down. Okay. All right. Next example: EURJPY chart in the 4-hour time frame. Same thing. Nice trending scenario. That's what the moving averages are for, as seen in the first chapter. Okay. We already know that we are in a trending market. Now it's all about finding a decent entry point. All right, then that's what we are studying breakouts now. Okay, what do we see here? What is that? Well, that's a flag. Okay, once again, swing down, consolidation, retrace to the area of dynamic resistance. It holds the bounce. Okay, it holds the retracement. We don't break above. We don't go anywhere near the 100. In fact, we just touch to the peak of the 50 and we shoot back down from there, finding one last one last time support of the flag bottom and giving way for a new swing down. Okay, that's the part we want to profit from. Then this swing down ends in another time of another area of congestion. We are gonna be until we reach more or less, in this case, in this trade, in this part of the chart. In all fairness, we don't quite hit the area of dynamic resistance. So depending on how strict you are with your entries and your setups, then perhaps you wouldn't have taken this trade. Okay, nonetheless, we see the same price behavior. We come from above, nice swing down, market takes a breath, areas reaches the area, or more or less a few pips short of it, a few pips shy of the area of dynamic resistance. We break to the downside, then we enter another area of congestion, in this case forming a very small triangle. Okay, two trend lines, just few bars, formed by few bars, barely 8-9 bars. Okay, it's very small triangle. Breakout, there it goes, until we find we have here another another flag. Okay, very steep in all fairness. But finally, that we are seeing some signals of weakening here. The 30 moving average is already pointing up. Price has been meandering around the 50 for longer than my taste. I don't know what's going to happen in this part of the chart, but nonetheless, I would feel a little bit uncomfortable around this area. But anyway, the important point of this video is to show you guys that once you find a trend in a scenario, guys, they don't happen that often. You will see by yourselves when you begin searching for these moving average formations. They don't happen that often, and when they do happen, they usually give out 2 or 3 possible trading opportunities. Okay, don't just take the first one, pat yourself on the back, tell yourself that you've done a good job, and let this and let the next ride and the next one and the next one go. Okay, go by. Instead, profit from the next one, from the first one. Close out the trade at a profit, reassess whether the trend is still in place. If it is, don't hesitate to search for a new entry, for a new breakout. Off it goes. Okay, more pips in the bank, and keep on waiting. Okay, keep on searching, scanning, having that chart on your trade on your watch list, because it might very well give out another signal. Okay, as we've seen in this one, in these examples. Okay, we've seen a few chances. I'm not saying you would have taken, or I would have personally taken all of them. I would have to analyze the chart in advance. I don't know if at this precise time there was some news coming out. I don't know if the longer time frames are showing some conflicting signals. But in a nice trending market, you usually get the chance to profit at least a couple of times per trend. Okay, not just once and let the trend go by without taking any more opportunities on it. Okay, like we saw in this case, we saw a few opportunities, few breakouts. We also saw this one, this chart on the USD/JPY 4 hours chart. It gave out 2 beautiful opportunities, especially this one, very clear. Then we had another flag in there. Okay, you see the flag. All right, you see the flag there for another swing down. Once you spot this kind of moving average formations, okay, keep on searching, get one trade, take the money off the table, okay, bank some pips, and then wait for the next breakout. Chances are that as long as the moving average are holding in place, as long as the dynamic area of resistance is holding in place, you will sooner or later get another breakout for a new swing down. Okay, it's the forex, one of the beauties of forex is that trends are very solid. Okay, they are more solid than in the stock markets. They are more solid than in futures trading. Forex is one of the most trendy markets out there, and when you find a trend, okay, they usually give out few chances to ride the market for different trading opportunities. All right, it's not just one trade per trend. Okay, it's few of them. Okay, that's the point of it. Until the trend is over, okay, until you see signals of weakness in the trend, don't hesitate to take multiple entries on it every time they present themselves. Okay. Alright guys, that's all for this video. I just wanted to remark an important point of trend trading. Alright, a trend is usually valid for few signals, okay, for few trades. Keep on searching for breakouts, because it's very common to find a number of consecutive breakouts at the end of every swing down. All right, it's a very common thing. Swing down, consolidation, breakout, swing down, consolidation, breakout, swing down, consolidation, breakout, swing down, and so on and so forth until the trend is compromised. Okay. All right, guys, that was all. If you have any doubt, you would like me to send you my feedback on this or any other topic, please don't hesitate to contact me on my email. It's on my trading blog. I am at your disposal for any question or, well, any trading related comment you would like to make. All right, bye bye.